Welcome to the Roy Morgan Weekly Update, including business confidence and football. But first, a look at several of the key weekly indicators, which were negatively impacted by the Reserve Bank's decision to raise interest rates last week, up 25 basis points to 4.1%. But despite the indicators moving in the wrong direction, support for the government is strong and actually increased slightly. Support for the Albanese Labor government was up 0.5% to 56% on a two-party preferred basis, and the coalition was down 0.5% to 44%. Now, this is about 4% higher for Labor than last year's federal election result, which the Labor Party won with 52.1% of the vote. However, government confidence, whether people think the country's going in the right direction or the wrong direction, that's another story. Government confidence dropped 1.5 points to only 82.5 this week. And this means that it's now back to the level it was prior to last year's federal election. A majority now, 50.5% of Australians, say they think the country's heading in the wrong direction. And only 33% they think that the country's heading in the right direction. Consumers actually reacted really badly to the Reserve Bank's decision to raise interest rates. The ANZ Roy Morgan Consumer Confidence Index fell 3.1 points to 72.7, the lowest it's been since early April 2020, right at the start of the pandemic. In addition, consumer confidence has now spent 15 weeks below the mark of 80, the longest period recession levels since the index began. This is really worrying. The Reserve Bank's interest rate increase prompted negative responses across the population, but especially from those most directly impacted, people paying off their homes, people with a mortgage. So consumer confidence for people paying off their homes plunged 5 points to only 66.2, a record low for this group. Consumer confidence for renters was also down sharply by 5 points to 75.5, and down almost 1 point to 75 for homeowners. There was some slightly better news on the inflation front following the Reserve Bank's meeting, with inflation expectations unchanged this week. So Australians still expect annual inflation to be about 5.5% over each of the next 2 years. Now a look at businesses and business confidence. Roy Morgan interviews about 1,500 businesses each and every month, and the results for May show the Roy Morgan Business Confidence Index virtually unchanged at 90.3. There was no budget bounce for the index after Treasurer Jim Chalmers delivered the Albanese government's first federal budget early in the month. Although the overall index at 90.3 is in negative territory, that's well below 100, businesses remain broadly positive about their own prospects. So among the businesses surveyed, 40.2% expect their business to be better off financially this time next year. Only 25.1% expect their business will be worse off financially. What businesses are concerned about is the Australian economy. A clear majority, 61.2%, expect bad times for the economy over the next year, and even more, 62% expect bad times for the economy over the next 5 years. It's these concerns about the Australian economy that are driving business confidence down. Having said that, there are some sectors that are more confident than others. For example, education and training is on 122.8. Information, media and telecommunications is on 116.2. Other confident industries include finance and insurance on 106.5, accommodation and food services on 106.1, and mining in barely positive territory on 100.1. The two least confident industries are agriculture on 73.9 and electricity, gas and water on only 36.6. Is it any wonder given the existential challenges being faced by that industry? And on a state-by-state level, there is a clear standout. Western Australia is enjoying strong business confidence, now at 134.3 and up significantly from a year ago. In contrast, in every other state, business confidence is in negative territory, below the neutral level of 100. And lowest of all is Victoria, where business confidence is only 74. The Victorian state budget is delivered in mid-May, provided few incentives for businesses in the state, and revealed the state continues to carry a significant debt burden. Victoria's current debt is larger than the debt of New South Wales and Queensland combined. Finally today, something different, a look at football. The A-League Grand Final held last week was won by the Central Coast Mariners for the first time in a decade. But the Mariners have the smallest supporter base of any of the original clubs, at only 177,000 Mariner supporters, although this has improved in recent years. And with a win, we might expect it to improve even more. The largest supporter bases are unsurprisingly the three most successful clubs in the three largest cities. Sydney Football Club with 693,000 supporters, ahead of Brisbane Roar with 595,000 supporters, and Melbourne Victory with 590,000 supporters. The round ball game is currently gearing up for the biggest celebration of world football in Australian history next month, with the FIFA Women's World Cup kicking off in Sydney in mid-July. The A-League, and especially the A-League Women's, will be hoping to build on the World Cup to significantly increase support for the game and for the individual clubs over the next few years. And that's a wrap for this week. Subscribe free to our Roy Morgan YouTube channel for all the latest political, economic and market research data and insights. Thanks for listening today. I look forward to bringing you the latest data on consumer confidence, inflation expectations and voting intentions next week. Take care. We'll see you next Tuesday.